Okay, welcome, ladies and gentlemen. Hopefully, just basically kicking off now, and I'm using for the first. Normally, I'll run these through Zoom, and obviously it's quite easier. But this one, obviously, we're running through the conference platform. So, firstly, I just want to say welcome to whoever's joining. Basically, the idea behind this is we really want to just provide a mechanism for people to engage and get content and additional value before emergence. And one of the best ways to do that is, for me, hosting these workshops around capital raising, because it's just an interesting area where not only is it relevant to founders, but it's also relevant to investors as well. So as I'm going to be going through this session, the session will probably go for about sort of 45 minutes to an hour, and then I'll be putting on the session with Jason as well, and that session will go for a bit shorter. It goes for about sort of 12 minutes. But really said, for me, there is normally I love to be really engaged. Unfortunately, this time I can't see a chat stream going through. So basically, if you have any questions or anything like that, it's difficult for me to see that through this format. So what I might do actually is I might just give me 1 second, and I'll just quickly put up our Brella. Oh no, I can see the chat box now. So look, if you do have any questions, I can see chat in here. So if anyone has any questions, I can say hello. And as a start, if you'd like to let me know where you're watching this stream from, that would be great. And then from there, obviously, we're going to be kicking into the workshop. So look forward to sharing this session with everyone, and I will speak to you, and obviously I'll go into the session now.
Okay. All right. So now we've got two parts. Now I can't make the thing live because it basically annoys with the settings that we've got for the live stream. So this is my session that I've done. Now I've been hosting workshops for some time now around the area of capital raising, and for me, it's an important one. It's an important session that I host because when I went through my own capital raising processes, I didn't really have people to sort of give me explanations on the experiences I was going through, the emotions I was going through, but also really just the fundamental stages. And basically, a lot of what I'm showing you is not just about, it's not just about what I've seen, what I've experienced myself as founders, but it's also what's been commonly done in the markets, right? And you'll see when I actually take you through this sort of workshop, you'll realize that a lot of what I'm actually covering is actually done by, when like IPO processes, for example, follow this process. When companies are raising funds, for example, they also follow this process. So, some of the stuff, I'm not trying to make it new. I'm just trying to distill and make it as simple as possible for people to follow. Welcome, Dick. We're following from Cambodia. Fantastic. Does anyone else want to mention where they're actually watching the live stream from? For me, I've had some crazy stuff where I've had people watching live streams at 3 a.m. in the morning, 7 a.m. in the morning. And we've tried to do this time so it's as friendly to as much of the potential audience as possible. Horrific echo. I'm not really sure why. Is anyone else getting an echo? Hello from Singapore. Okay, so I guess someone else is hearing a loud echo as well. Just let me know if this is that better now that I've taken that out? Is that better?
Send live. Okay, ladies and gentlemen, we are back. Yeah, so okay, I just want to test, can you hear me now? Just waiting. Can everyone hear me now? Okay, fantastic. We're back in the game. All right. So I'll get Craigie of this first part. So I'll get started. Okay. So, this one challenge when you use new technology. For me, there's a new streaming software that we're using. So, just bear with me as we're going through it. But look, I said I wanted this to be, so now that I've got a chat, I want this to be as interactive as possible. So basically from my side, let me just pull this down a bit. So that's really important for me that I, obviously provide as much content as possible and as much value in these sessions. Okay, now hopefully that echo is gone because I just changed another. Okay, this echo is doing my head in. So look, I'll kick off, and then worst case scenario, what I'll do is I'll take out the mic, and then that should be okay again. But can you guys just keep letting me know if you keep on hearing an echo? If you don't hear an echo, that's great. As I said, I love this to be interactive, so please ask as many questions as possible. Fantastic, the echo is gone. It was as simple as basically I had to turn the volume off my laptop, which I have no volume coming through the screen at all, so that's a surprise. Okay, so I'll kick into it now. So basically, this session's important for me. I said this is your session, right? So ask as many questions as possible. And once again, this time, please let us know where you're from. I'm obviously presenting this from Australia. We have Cambodia, we have Singapore. Hopefully there's some Europeans as well. Hopefully there's some Australians that are also participating. But really, I said, this session is for you. So please make sure that you ask as many questions as possible whilst we're going through it. So the first one is, as I said, the reason why we do this is obviously this is for companies that are looking to raise over the next 12 to 24 months. It's also for investors that are looking to actually assist their clients with their capital raise. And it's also for advisors in the ecosystem just wanting to improve their own processes and the way in which they go about raising money, right? So for me, the agenda for this session is really straightforward. Firstly, there's an introduction. Then I'll be talking about the actual capital raising workshop. I said it is a bit more advanced, so please note there is a bit more detail to it. I do have a more basic one that I actually do. And at some stage, if you guys want to come along to that, I'm happy to invite you sort of post this event to that session. So, and then the last one is obviously I'll be going through investor relations, and then also there'll be a Q&A aspect to it. But once again, please, as engaged as possible, ask questions. I said I want to make this session as relevant for anyone watching. So the reason why I do this is firstly, I want you as a founder or you as an investor to understand what are the actual 3 stages of promoting a capital raising process. I also want you to understand at which, so you're aware of which stage you're at and what actions are actually required at those stages. And then the last 2 is really, if you do get rejection along the way, it actually can be quite positive in many different directions. So I really want to cover how that can also work for you as well. And then the last one is I just really want to empower your investor relations strategy, because one of the biggest challenges with this space is people just expect sort of one-off exercises, and they think that if they just do that one-off exercise, that will bring the money in. But the reality is capital raising and everything we do as founders, and no different to sales and marketing, right? It's just a consistent process that you actually go through. So whilst we all want the quick hit of raising money, please understand that this is a process. And I said I do have 5 steps that I normally go through, but this is more around specifically the cap raising part. Now, also just a quick check-in. Can everyone still hear me, and is everything fine? Because all of a sudden the comments have stopped in the comment box, and that makes me nervous. Okay, so let's kick into the workshop. Okay, so firstly is just going back to a reminder of what I was talking about so I said I do this other capital raising workshop, but the reminder I'd love to provide is that capital raising, it is effectively a marketing and sales process. And if you get that in the core, then you understand that with any type of marketing and sales process, right, there's the marketing aspect is the investor attraction component, and then the sales process is where you're actually taking, people through a certain, a certain mechanism, a certain way in which you go about things, right? So, that is the first most important part to really understand in this area. Now, the key things that we sort of highlight to companies when they're going through a capital raising process is the first step is to get ready. The second step is to stay ready. The third step is to always be raising. Now, for some people, when they hear that, they're a bit surprised when we talk about that companies should always be looking to raise. But that doesn't technically mean that you're actually, got people coming into your deal, people putting money into your bank account all that time. Effectively, what it really means is you're always having discussions with potential investors. So to me, that's always important for you as a founder. And then the next part is get to a yes or no as fast as possible. Because when you're going through this process, there's nothing worse than having a long drawn out yes or no, right? Sorry, a long drawn out no is worse than basically, sorry, I'm just getting updates. Oh, so now I'm talking away, and I've just found out I didn't send my slideshow to you. So just 1 second, and I send my. So here's my. There we go. Forgive my amateur hour presenting. Fortunately, there's a lot of people better than me producing the Emergence conference that will make this absolutely seamless. So basically, when you're looking at, as I said, get ready, stay ready, always be raising, and then get to a yes or no as fast as possible, because that's an important part of you when you're going through this process. You do not want to be waiting for 3 months or 6 months to get a no. And I see that all too often. And worst of all, I see founders put their entire capital raising on hold to basically get to those outcomes. So, that's the other so for us, that sits as the core principles of what we talk about when it comes to raising money. Now, in mastering the capital raise process, I really encourage you as a founder to think about how you can, number one, track and measure your own activities. So for example, if you go and speak to 50 investors and you have 5 convert, then you know that you've got a 1 in 5 conversion ratio, right? Sorry, 1 in 10 conversion ratio. Why is that important? Because that starts to form an element of confidence in your mind about, oh, hang on a second, I'm going through this cap raise. Well, if I have 10 conversations, then I know that I will typically have at least 1 investor that will come on board. That's confidence. And even that little bit of confidence can make a difference for you. What's most important is if you've got 1 in 20, if you're getting a 1 in 20 conversion ratio, then you might start to think to yourself that, you know what? There's probably more improvement that I could have in my pitch, my process. Maybe I need to improve some of the fundamentals of my business, etc. Or maybe your area is having your sector is out of favor with investors at the moment, so therefore you simply have to work harder. But tracking and measuring is just a simple part of this process. The next one is that should look to create, the way I see it is that capital raising should just be business as usual, right? So for me, I incorporate conversations with investors into my day as much as I normally do sales and marketing. Now, I know there's absolutely schools of thought where they say, oh, you should be out there building product, you should be. For me, I've just personally found that I get so much valuable information from having conversations with investors, whether it be about my business or whether it be about something else. Well, Benjamin, well done. You've asked the first question, which I typically get asked every single time I do a presentation, is that will I be providing my slides? What I might do is we are obviously recording this. So I might leave this up for a period of time, sort of post it so that people can take notes. The only reason why I don't typically put up send everyone out my slides is because it actually has my live information in it. It has actually real information from my own deal room in it. So this is not your sort of typical presentation where they use sort of demonstration stuff. This is my actual real room. So I hope that makes sense. So, okay, so the next part is number 3 to mastering is just creating the defined processes, actually having scripts and actually having a pathway, understanding what some of the desires, the analytics, areas that you can improve. And then also this last one, I think is a new one that's really I've been talking about a lot more, which is what is your thesis? Because when I've been having conversations with investors, I find that investors tend to have their own thesis about why they're interested in my business, right? Or why they're having a discussion. So it's important that if you have your own thesis about what you believe is the opportunity in your area. Now, of course, we all typically have, okay, here's our problem, here's our solution. But if we all have our own thesis about our space and what the opportunity is, what I've found is if there's alignment of that thesis, there's a higher probability of that person becoming a shareholder in your business. And so that's why I like to tell companies that they should really like to try and get crystal clear on what their thesis for their business is. Now, for you as a founder, what is your role? Your role is simply to basically help your business go from unknown to known to success, right? So now there's different ways in which you do that, but I love I've put in there about manufacturing awareness. The reality is what you are doing is manufacturing serendipity. You are creating an opportunity out of thin air with someone who could be relevant to your business that you can then move into some sort of transaction with. And to me, that's important because the more people that know about what you're doing, then often what you have is more people understanding and aware about what's actually taking place within your business and within your sort of milestones and so forth. So the role of founder, unknown, so awareness, to known, to success. Okay. Next one. So what are those 3 steps? So fundamentally, if you're thinking about the raise, I mentioned to you it is simply a marketing and a sales process, right? So if you are to break down what these 3 steps are, it's really simple. The first step is awareness, as I just highlighted. The second step is consideration. So this is when the investor is actually considering whether they are going to look to invest into your business. And then the last part is decision. Now, each of these stages has a different approach in which you actually take to it. So awareness, for example. So let's have a look at awareness. So for me, I've always felt that there's 3 elements that really make awareness. The first one is brand, right? And I've got a subject that I'm pretty passionate talking about, which is about capital raising brand, right? It's how do you communicate to investors in a way which gets their attention in seconds, right? Now, there's certain ways that you do that, and I'll sort of cover that in a second, but your capital raising brand is important. How you position yourself to potential investors and to the ecosystem. And effectively, we've broken it down to 7 key areas that you can look at as far as how you build your capital raising brand. The next one that I think is important is confidence, right? Actually, confidence and trust. Effectively, what you're doing as part of your business building and as part of what you're communicating with, when you're demonstrating your capital raising brand, what you're effectively communicating is trust and confidence indicators, right? So for example, if you say that a well-known investor in your sector has actually invested into your business and you're having conversations with other investors, they will see that as a trust and confidence indicator because it means someone else has done due diligence on your business and they've invested into you. But basically, if you don't have, then you have to look at the other key areas that you need to look to build up those trust and confidence indicators when you're going to raise money. Now, sometimes this doesn't happen overnight, and I'll take you through that with the awareness stage, right? Do not think that this all has to happen at once. It can take some time to do it. Okay, next one. So when I talked about building your capital raising brand, here's some of the areas you can actually look at, right? So for me, I've tried to do this in such a way that I feel for you, if you take this, even just this slide alone, if you just did nothing, but took notes on what this slide is and thought, okay, when I'm positioning my business or when I'm communicating my business to investors, these are the key elements that I want them to understand. So the first thing I'm doing is that I'm building this is the awareness part. Sorry, wrong slide. Next slide is the one I'm talking about. In this part, you're building awareness. So the first part is, who are you actually going to build awareness to, right? Well, there's your existing investors as a starting point, right? So if you can have a significant portion of your existing investors reinvest into your business, that's a good start, right? Because effectively, when we go to raise money, we're really trying to get the hardest part with a capital raise is always the first 50%. And whenever you see companies that are able to complete the first 50% of their capital raise with their existing investors, you find they typically have a better time with that second half of that capital raise than if they don't. If you don't have that, then what you need to do is this. You need to start building a list of potential investors. So every company that's thinking about raising capital should have their own registration of interest list when it comes to actually raising money, right? And these are people that you can actually build relationships and that you can actually communicate with about your updates and so forth. Now, that doesn't mean every single one of them invest, but what it does mean is that they actually might start following you, and when you hit certain milestones, that they may look to participate. So the rest of them, I'm not going to go into as much detail for the rest of them, but they're fairly obvious. What you're trying to do is you're trying to create subconscious, subliminal awareness about your business. And the way I like to think about it is, you think about the old sort of communications they used to have about marketing, is that people need to see your company name a certain amount of times before they become, not just subliminally aware, but then consciously aware, where they start to get to the point, wow, I've seen that company before. They seem like they're actually doing some interesting stuff. For me, and I'll give you my story, when COVID hit, was that we went very aggressive in the virtual environment straight away. And the nice thing I had was that people were complimenting us about how proactive we were, how visible we were, and how well we were doing as a company. Now, they had no idea of our numbers. They had no idea of anything. But the perception of, because they saw us in so many different places, it helped build a perception in their mind about what was taking place. And that's always helpful, because it means I don't have to communicate it, right? Because they already have got some sort of awareness. And when I talk about media as an example, like, I find that people that are in the media aspect, if you're getting lots of media coverage, sometimes that does the work for you and can be quite important. Okay, next one. Now we talk about capital raising brand. Sorry, I'm just going to get some water. Now I'll talk about the brand part. Just out of curiosity, you enjoying the presentation and the workshop so far? It's weird for me because I'm presenting and there's probably about a sort of 10 to 15 second delay. So I can see a screen with my hands moving, and I'm obviously talking about something different at that time. So any feedback in the chat box would be helpful. And of course, as I said, any questions would be great as well. Okay, so when you're building a capital raising brand, the easiest way to talk about this is that this is your way to get an investor's attention in seconds. So the ways you can do that: board. If you can communicate that your board has been there, done that experience, that's important, right? Your team, same with your team. If you can demonstrate their execution capacity, that's important. So how could you do that? So you could, firstly, what's important? Thanks, Adrian. What's important is, to give you an idea, is that if you can show that they've had successful listings on different stock exchanges, or they've successfully built businesses that have been acquired, or they've had senior positions in sectors which are relevant to the business that you're in, that's communicating your team's potential, been there, done that, execution capacity. That's brand element. Investors understand that really quickly. Next, your investors. If you can show that investors that have already gone into your business, in your space and proactive in your space, for a lot of investors, they'll see that straight away and they'll think to themselves, okay, that's interesting, because someone else has already done the work and they've invested into you, right? So sometimes being able to mention your existing investors is helpful for attracting new investors into your business. Next one, your awards. If you're in a more technical area, sometimes being able to mention that you've won awards is helpful. And in fact, when we're promoting companies, to be able to say that a company's award-winning is also helpful in the promotional aspect, because it shows that the industry is actually recognizing what you're doing. Grants is helpful, sector is helpful. So typically, we have a great saying that a rising tide lifts all boats. So if your sector is of high interest to investors, then you should obviously be communicating that. So for example, one of the sectors that become red hot during the start of COVID was telehealth, right? Because it becomes so important for everyone. So therefore, every telehealth company was scrambling for the attention of investors because this was their time to shine, right? And they're the sort of moments that you can't predict. You just have to roll with it. If your sector is in favor at that point in time, you just simply have to roll with it and do whatever you can to actually take advantage of it. And then the last one is metrics. Now, I put this last because what happens is people think that typically investors just focus on metrics. Now, absolutely, there are some investors that do. But for me, if you're a B2C company and you have a growth rate that looks like that, then you should be looking to identify it. If you're a B2B business and you also have similar metrics that you think would be relevant, every business, SaaS businesses have their different types of metrics. Life science business have their different types of metrics or data that investors are looking for. Either way, you need to demonstrate in some way those metrics when they're relevant to investors, because they effectively communicate traction about your business. Without you having to say a single thing, they communicate traction. And I think in the next slide, talk about, okay, now if you're talking about in the B2B area, having blue chip customers is also really helpful as well. Okay, now let's get on to the foundations of your pitch. So the first one is obviously your elevator pitch, then 60-word summary, and then bullet points. Now, mastering the elevator pitch is really simple, but yet a lot of people don't do it really well. One of our clients at Wholesale Investor, we were working with him for some time, and he was getting really frustrated because he wasn't having any breakthroughs with his investor conversations. And all I did was help him summarize what he does into one line. And what's interesting is he previously was having 15 to 20-minute conversations every single time that someone said to him, "What does your company do?" So after I got him to summarize it to one line, basically what happened is he then went on to raise $6.5 million, right? And he also ended up getting acquired by an ASX listed company, right? Now, the reality is what was the most important thing that it gave him was not any of that. The most important thing was it gave him confidence in clearly articulating his business very, very succinctly to potential investors. So for me, getting the elevator pitch right is important, because if you can't get past the elevator pitch, then it's very hard to continue more discussions with investors. Okay, now I'm not going to go into all these, but these are the ones that I use for Wholesale Investor, right? Now, if you break down each of these points, basically what I'm establishing is exactly what I highlighted to you in the capital raising brand perspective. So the first one I'm highlighting that we've got an active, engaged, three-sided marketplace. Why do I highlight that? Because I know when you're looking at marketplace businesses, it's very, very, very rare to have active three sides. So I communicate it. Next one, all the adoption. The next one's about traction. Next one's about traction. The next one's about the board and advisory. Next one's about existing shareholders, corporate partners, because I'm B2B type business. And then also I'm talking about the intelligence aspect, because I know the value of that. And then actually I'm talking about the revenue generated outside of Australia. Now for us, that's actually above 30% now, but you get the idea. In each bullet point, I am communicating to potential investors what they need to see and what they need to understand as an investor. Even with the shareholders part, I actually highlight the backgrounds of my private investor shareholders, because I want to subconsciously communicate to a potential investor that the problem is a global one and it's an industry-wide one, right? So for me, it's actually across 7 countries now. So I've got shareholders across 7 countries, right? So it's what you also don't communicate that's sometimes important as well, right? So I'm not saying that, in me saying that, I'm communicating far more than just the words. And that's what I'm effectively going for, when I'm communicating. Okay, inviting investors to your deal room. I use this as an example just to see how simple the communications are that I send to potential investors. Because I've had situations where I've been working with companies and their first email that they send to a potential investor is often anywhere from like a 4 or 5 page email, and then it has attachments across it. And you sit there and go, how is that even possible? Like, why would you send that to an investor? In one situation, I actually had to get on the phone to the investor, apologize, and make sure they're aware that the company was worthwhile of a 30-minute meeting. So sometimes your email communications can kill the deal without you even saying a word, right? Because they think, well, if they're going to send me that long an email, that means they're going to try and talk my ear off for 3 hours. And that's not what an investor wants. Okay, next one. Okay, very simple. So this is existing investors. This is potential investors. Very straightforward. Okay, you can see examples of how I got media attention. The cool thing about this environment now is it's very easy to actually get sort of startup media attention because there's a lot of different groups. Singapore, there's lots of great companies like E27, Deal Street Asia. In UK, I know they've got plenty of different startup media groups as well. Australia, you've got places like Startup Daily, Smart Company, AusBiz. I said we are actually really lucky. We're spoiled for options to get media awareness now, right? Because previously you didn't have those kind of media outlets that you can actually leverage off, but it's important, and investors do follow them. Now, the foundations, when you're building your media strategy, I think it's important that you said, you do highlight these key areas because it goes back to build the media relationships, have your 60-word summary, and then have your key bullet points already ready. Okay, so we've covered the awareness stage. Now we're moving into the consideration and the momentum stage, okay? So in this stage, I like to highlight these 3 important parts. So firstly, it's about repetition. Secondly, it's about frequency over a period of time. And then thirdly, minimum you want to have at least 7 touch points with a potential investor as they're going through the capital raising process. Now, the reason why I've broken this down, and I know some founders might be sitting there thinking, oh, wow, this is too hard, it's actually not. It's actually really straightforward to do when you start to get your own processes right. But the reality is, capital raising is so important for most companies that they just can't breathe without it. Okay, none of us can survive without capital. And if you want to accelerate growth, if you want to actually discover what that infinite potential in your business is, then you need to invest into it. And if you need to invest into it, then you need to raise money. So it's a simple thing of just putting in that effort. And I can trust me when you say every media story you hear about people raising money, typically they've known that business for a good period of time before they've put that money in. Right, so the first step, I'm not going to go into too much detail on this, but set up your pitch deck room, right? So have a high-level pitch deck room, which typically has your pitch deck in it. Also may have an investment flyer in it, as an example. For me, I've got a couple other docs, which I'll mention about in a second, but just keep it really simple, right? And investors will go through it. Secondly, I highly encourage you to answer investors' questions before they even ask them. So what I do is anytime an investor asks me a question, I note it. If I get asked that question again, then I convert that into a frequently asked question, because nothing frustrates me more than answering the exact same question over and over again. And I'm sure it happens the exact same way for you guys as well. So that's another one. Next one, in that frequently asked questions, you've got to cover the 3 top areas that are of interest to investors. So the first one is your valuation. So you need to provide an explanation for it and references for that. Next one, your business model. How are you going to grow the business? How are you going to take that investor's money and convert it into 5 to 10x results? How do they see that in the information you're providing, right? So your business model is important. And then exit. Now, I know there's always debate about this with investors, but effectively, and if investors are interested in to understand what you're just thinking about as an exit, it doesn't mean you have to be on the path, but at least you've got it in mind as far as what is the path for the investor to get their money out of your business. I think that's important for them to know. So this is Now, as I talked about, I think Benjamin was asking about my presentation. Here's my actual real live deal room, right? It's a screenshot from it. So you can see in my room that in the top questions, right? The top questions in my deal room are, how do you explain the valuation? What are the additional upsell and additional revenue models? Are there any, they literally fall into those three categories that I just highlighted to everyone, right? And to me, this is important because when you see this, it's intelligence. So if I can actually get that intelligence straight off the bat, it means I don't have to, takes the guesswork for me out of actually raising money. And effectively, that's what we're all trying to do. We're trying to remove the guesswork for each of us out of going through a capital raise process. Okay, so email promotion, right? Now, as I mentioned, this is part of the awareness consideration part. This is me communicating to potential investors. You can see that there's the bullet points I was showing before. There's my introduction, right? Really simple. So I prepared an introductory email that talks about what we're doing, and then I put in some of the milestones, some of the highlights of my business. I said, I haven't tried to get fancy with it. I've just followed exactly what I've communicated in those sort of top level areas. Now, just to do a quick check-in on everyone, is everyone following what I'm saying? You enjoying the content so far? Do you have any questions, etc.? Said, please put in the chat box. Okay, next one. Did I miss any? No. Okay, so investor communications. So here's three important parts when you're going through that. Firstly, on a first meeting with an investor, it's 30 minutes and that's it. Do not go over that 30-minute limit, right? Because what you're doing is if you hold an investor in a meeting for 3 hours, that's actually a really bad signal, right? It's a super bad signal unless, I said, there is exceptions to this, but I'd tell you 99% of the time, even if investors trying to ask you more questions, right? Say, look, happy to have a second discussion with you, right? Said, I really appreciate we've had our 30 minutes to chat now, right? But love to set up a second discussion with you. And in fact, I've got a bunch of frequently asked questions that most investors have that I'm happy to share with you before our second meeting, right? This is just important because what it's doing is it's just making sure you manage your time effectively, right? And also you're absolutely respecting their time, right? Now, even if they want to ask more, right, it's just more about the process. Okay, brilliant. Welcome, Tristan. Where are you from out of curiosity, Tristan? Okay, so the next one, process, format, and then when you have the one-to-one conversation with the potential investor, the format of that is really simple. Give a quick introduction to yourself, right? And then let them know that this is how it's going to go. So the first part of the conversation said, I'd love to know a little bit more about yourself, what you normally like to invest in, how you normally like to invest. And then said, I'm happy to go through any questions that you may have, right? Because for me, I always want to understand more about the investor that I'm having a conversation with. I want to understand what's important to them. Do they want to be an active investor? Do they want to be passive? Are they interested in a board position? What other opportunities are they investing into that's similar to mine? Like for example, I asked one person, what other companies have you invested into in our area? And they said that this was their first private company investment. Now, for me, I'm not comfortable with that. I don't want to be someone's first investment. Now, I know someone has to be a first investment for someone somewhere. For me, that's not my area. So I just let that go. Right? Now, I'm cool with that. That's just me. But it's important to have those questions off the bat, and it also just makes cool. It just makes an interesting discussion, straight off the bat, and it also gets everyone quite relaxed. And then what I do is I typically have in front of me a script which has my recent highlights. Now, the reason I script it is not because I need it to remember. I script it is so I don't talk about a whole bunch of other stuff that's unnecessary. And that's what I'm really trying to avoid when I actually do that. And then the last one is those three key points going forward, and then obviously over to any questions you may have. So to me, that is the structure of the first one-to-one meeting. Now, I'm just going to move through these a bit more quickly. Basically, the reason said this is the perfect reason of why I actually script stuff is because what I found myself doing is I was doing the left. I was explaining all the work we were doing, all the things we were focused on, product aspect, And basically I had an investor that literally finished the lunch with me, and he actually said, just want to let you know, I'm not going to be investing. I can appreciate your passion, enthusiasm for the product and how you want to support your clients and all that sort of stuff. He goes, but what I really didn't understand is actually what you want to achieve. And I was like, oh shit. Right. So that was a big lesson for me. Super, really, really good lesson. And then he turned around and he explained to me how he just raised $10 million for one of his investee companies. And he said, this is what the company has to do. He goes, but this is what I communicate. And that lesson changed the entire way that I communicate with investors. Now, I still may stuff up and get back to the crapping on, right? But that was an important lesson for me. Okay, next one. Okay, so presentation. So this is for companies that are actually working in an area where you might want to consider it white space. So for me, I found that I had investors that were asking me, saying stuff to me like, oh, I don't see the problem that you're solving. And I was just like, excuse me? And I'd be thinking, so you think that capital raising is perfectly efficient and that investment in private companies is perfectly efficient, which is obviously bullshit because it's not. But that's where my head was at. And so I realized that what I needed to do was to do a session on what the future of capital raising and venture investment is from our perspective. Because if they didn't understand it, if they weren't aware, then I have to communicate to them. It becomes my job. And I have to kid you not, I was communicating this to VCs, to family offices, and to people in my area. And funny enough, the people that become my shareholders, right, understood this problem and all have backgrounds in this space, right? But they understood it when they weren't a VC or when they weren't at a PE house, et cetera, et cetera. So you get the idea. So that's why, being able to communicate and talk to others about the way you see the future, the way it should be, is actually quite important, right? Because it helps paint the direction of where you want to go. And you'll see that in my presentation, like as part of Emergence, I actually do a session on the future of capital raising and venture investment, right? Because I want to start to dictate how this space should actually unfold. And you'll see that in my conversations. But it's also my genuine belief as to how I actually think, the direction I think it's moving. And it's up to them to agree with me or disagree. Okay, so promoting your capital raise. Okay, you probably all know these different areas, right? It's just really about how do you be consistent. Now, remember, when you're promoting your capital raise, we're going for 7 touch points. So it could be online. It could be LinkedIn posts, for example. I find LinkedIn posts are important. But I'll tell you another one. I've got 2 Chinese shareholders, right? So I also do some communications on WeChat as well. Right. So because once again, it's just about, I know that I'm always going for those touch points, at least those 7 touch points, platforms, industry publications, etc. We are highlighting to companies right now that investors are most likely to be aligned and strategic. Now, what's funny about that is when people see service providers or professional services, or professional service people come up to them, straight away in their brain, they think, okay, this person wants my money, not to give me money. And I keep on highlighting to founders over and over again that 75% of my registry have commercial operations in this space. They are actively in this space. And that's important to understand because this is where the funding for the entire ecosystem has come. Partners of legal firms, accounting firms, investment bankers, corporate finance, tech development guys said they're actively investing into companies in this area. Consultants are also investing, right? But you have to have the conversation to find out which side they're playing on, whether it be the investment side or the advisory side, or sometimes they're investing and also they're providing advisory as well. Okay, next one. Now, give yourself a 60-day, I mentioned this before. So what you typically do is you give yourself a 60-day window to try and get at least 50% of the capital raised. Because what that then does is that creates momentum for you. The biggest thing you're trying to do in the awareness and the consideration phase is you're really trying to get momentum for your capital raise, right? For me, I get aggressive in this part. For a lot of companies that are actually, for companies involved in Emergence is that momentum for them. That's what they're looking for as the starting point to start generating interest. And that's fantastic, right? Really, we have to do whatever we can to generate interest for our business. You know, for me, people have no idea how much I've invested into promotion, right, to help me manufacture serendipity of interest in my business, right? I've helped launch our company in other countries with that sort of mindset, right? But too often what happens in our space is investors are afraid to actually, they're happy to invest in building products, but for some reason we're being made to feel bad about investing in the promotion of our business or investing in the promotion of our capital raise. For me, I understand it's just a game. It's a game of awareness, and it's a game of manufacturing that serendipity and affect, you know, the whole platform sort of built around it. Here's all the different ways in which you can profile and sort of call to action. I'm not going to spend too much time going into these, but I just say do them all. People say, oh, I'm trying to do this way. Should I do this or should I do that? I say, if you look at me, I've done all of these, except for pitch competitions. I've literally done all of them over and over again. The only reason I haven't done pitch competitions is because when I was launching WI, pitch competitions didn't exist, right? So true story. But if they were, 100% I'd be going to pitch competitions, right? Conferences. I actually pay to go to other people's conferences, right? Because the reason is I am just trying to build, no different to everyone else, I'm trying to build a brand, and I want to build awareness about what I do. And I want to come across the right person at the right time that can actually take, so what you want is that one person that can strategically change the entire direction, you know, the corporate trajectory of your business. We may have to speak to 100 people to get to that, but it's absolutely worth it when it takes place. Momentum creation. I said, I've done all of these, right? So when you're actually in that phase of getting into that decision-making phase or building that momentum, this is the way you do it, because you want to build up as much momentum in your business as possible, and you want to build up as much interest as possible, because that more interest, then you've actually got competitive pressure. What's the hardest thing to do? It's very hard to sell a secret, and it's very hard to put pressure when you've got no one else interested in your capital raise. Okay, so now moving into that process of decision-making and pressure on the actual process, right? So presentations and pitching. This was actually me pitching at our Emergence last year. So I actually presented WI at Emergence last year. Yeah, how funny is that? That was the last live event that we actually did. Interesting. And then company announcements is another way. So I'm consistently updating shareholders and communicating to potential investors on what's happening in our business, right? Because I don't know when there might be a trigger point for them to become actively engaged and then actually invest into my company. So I'm always communicating with them. And people then ask, what things should they be communicating? Your content ideas are down the bottom. Awards, performance stats, recent media announcements, company celebrations, milestones, recent deals, and capital raising. You know, said investors like to see that, you know, other investors are putting in money. And when you're and here's some of the things you can focus on for your investor communications: progress announcements. You can do webinars, presentations, boardroom sessions, one-to-one meeting, proactive follow-up, etc. All this factors in to your 7 touch points. Make sense? Okay, now this is my process, and obviously I've got a little bit of a snapshot of our software Crisp in that, but for me, as I said, gaining that insight is important. Obviously they've updated since we took this initial image, but yeah, how do I know what an investor's interested in? And then actually we've got another one where when an investor registers and they're going through my frequently asked questions, I can see what questions they're looking at, and that's important for me because it helps me understand what's most important to them, right? So once again, all I want is intelligence. I want to have confidence when I'm going to a capital raise that I know what the investor is what is of interest to the investor and what are their key and important points. So now moving on to the investor psychological process. I can't believe we're almost up to an hour already. The investor side, no investor wants to be the first one in, and they also don't want to miss out. Bandwagon effect is real. I'm sure you've seen every single media announcement of a company raising money. Typically, you'll find that they've always got so VCs will follow other VCs, high net worths will follow other high net worths, family offices will follow other family offices. It is very common that this happens, okay? Next one, FOMO, fear of missing out. So you go through 3 different phases. Firstly, it's a struggle to get an investor on board. Then once you have those first either lead investor or you get to that 50% mark, then you can move into the bandwagon effect, because you can say, okay, well, we've already got 60% filled. Now we're just looking to finalize the balance, finalize the remaining part, right? And that sits easier in the mind of an investor because they're already confident that you've raised a decent amount of money, right? And then you move into the fear of missing out. Said FOMO still even works with investors. In fact, if you think about this deadline pressure process, this was actually built by the IPO process. The IPO process is exactly what I presented tonight. Firstly, there's that feeling out process, the understanding where you are, they build awareness, then they get into hype mode, they start getting media attention, they do presentations, they do boardrooms, they do all this stuff, and then they move into the decision part. They manufacture a deadline to move everyone towards. Funds will do first closes, second closes, and third closes just because they know that what moves people forward is typically deadlines, right? And then the investor psychological process is they're typically looking for 5x to 10x returns. And the reason I highlight that is because people always ask us questions about valuation, right? And it's the one area I don't really like to talk to about founders because we're all sensitive on the value of our own businesses. But 5x to 10x returns, they need to see what is that path for them achieving that result. So whatever you're being valued at, what does being valued at 5 to 10 times look like? What milestones do you need to achieve? What sort of traction do you need to have? What sort of velocity would you need to have? What other markets would you need to be in? What data, what metrics would you need to be showing, etc. Short-term uplift. So my favorite type of deals to work with is pre-IPO. Now, that doesn't mean I love working with all types of companies, but pre-IPO is the easiest because there's typically a short-term uplift and there's an exit coming up, right? So as I said, this is what they are fundamentally thinking when they're actually going through this process. Now, when you're communicating with investors, here's some of my recommendations. At a minimum, you need to be communicating quarterly. Ideally, you're communicating monthly. I'm communicating monthly at the moment. I use emails and I also use videos. I've literally sent videos to my shareholders with just updates on what's happening, just to simplify things for myself. I also do sessions with my shareholders where basically I'm just running them through what we're working on. In fact, on Wednesday, we're actually doing a session with one of my shareholders that's actually been mentoring me on shareholder engagement. I'm actually doing a session with him on that. So look out for that session. That's coming up on Wednesday. In fact, we've actually got some really cool sessions coming up this week. Pretty much every night at 6 p.m., we've got different related sessions to both founders and also investors this week. So do make sure you join. And then, create engagement. I just realized I got 2 G's in that. Create engagement opportunities. Okay, I'm not going to break this down too much, but you get the idea. Right, here's all the different things that you can communicate with potential investors. Right now, sometimes you're communicating one-off stuff. Sometimes you're communicating all of this. I just recently did a 6-month update in which I communicated pretty much all those different things that were important to us. I had one version that was for my existing investors, and then I had another version which is for potential investors, right? So existing investors get all sorts of financial metrics and so forth. Potential investors get more of a high-level sort of update. Okay, activating investors. Okay, so here's different ways, and once again, different ways that investors can actually help you in building your business. Now, this is what's important for me. This is why I ask questions to investors about what's important to them, because investors can help you raise capital. They can help you in building the board. They can help you in commercial introductions. They can help you with mistakes that other companies have made or success stories that other companies have made. They can introduce you to trusted service providers. I would say the biggest one that I've got out of sort of my investors has been commercial introductions, but really the trusted service providers. I think that's been the biggest one that I've really got out of it. Also, my shareholders helped me build structure into my board meetings and also how I communicated with them as well, which I think is important. I just put this in there because one of the biggest challenges when I'm talking about capital raising and I talk about what I've done, sometimes people make this mistake that they think is my capital raising is all, it's peaches and cream and it's really easy. It's actually not. I get rejected a lot, no different to you. I get ghosted by investors. I get rejected by investors. These are all the different ways that investors have actually said no to me in my capital raise, right? And we've all got our stories. You should just collect them. It just becomes fuel and ammunition for building and driving your business forward. The last one is obviously a joke, but we don't like gingers, but I just put that in there as a bit of fun. But this is the sort of stuff that I get. My wife is not keen on the investment is one that I had. I thought, fuck, that's interesting. The last time, I said it's not like I was purchasing a vacuum cleaner or anything like that. Anyway, you get the idea. Everyone has their rejections in this space. No one doesn't. The hard part is that we all make to feel like there's something wrong with each of us when we get those rejections. But stay the course, stay disciplined, and you can be effective with your results. I highlight that companies should always be raising because this has been my situation. I've had now on multiple occasions where investors have just been following, and then all of a sudden after 12, 18, 24 months, they suddenly become a shareholder. As I said, I just do what I showed you, and I try and lose the attachment to it now because I said sometimes it's just such an emotional thing getting rejected from investors. And I know the most frustrating one is the ghosting, right? Because it's hard when someone's showing a lot of interest and then all of a sudden they just go quiet on you. Okay, I'm not going to go too much of that. So that's my presentation for now. Now, it's going to be over to Q&A. Now, I always put my details up here. Feel free to add me on LinkedIn. I'm always communicating stuff about raising money. This is now time for Q&A. So please put your questions in the box, and then I will answer them. And because there's a delay, I'm just going to be sitting here. So there's about a 5-second delay, maybe 10. All right, so I've just asked if you have any questions. All right, now I assume everyone's basically added. I said you can add me on LinkedIn. It's just under my name. I'll just give a bit of time just because of the delay for anyone to ask any questions. Okay, there doesn't seem to be any questions so far. I said working with a delay is absolutely new for me. That is for sure. Okay, well, if no one has any questions, what I'll do, just give me 1 second, and I'll set up the next stream. So just give me 1 second. I'll put this up. Basically, what I'm going to do now is going to be setting up the next presentation.
Hi everyone, this is Jason from Cake, and today we're going to talk about how to speed up your round. So you can literally get your round done in half the time, and in the interest of that, I'm going to get straight into it. So Cake and Crisp, really help use technology as much as you can with your raise, with your cap table, get everything, done as seamlessly and streamlined as you can. We are raising in reasonably tough conditions. There's definitely money out there, absolutely, but unfortunately, it's just a bit tougher than normal. So just work harder, cast a wider net, follow up harder. Make sure your deal is COVID-proof. Make sure your story's future-proof. All these things so that you're the best deal you can be, and you can beat out that next deal. Okay, so we're going to go through getting ready, marketing, and closing. So in getting ready, you want to measure twice and cut once. This is really important. You don't want to get into the middle of your raise and realize that you've made a whole bunch of mistakes preparing, because you'll slow down your deal and you'll actually lose investors. Every investor you lose is another 10 investors you need to talk to, to get back to that one that wants to invest. So prepare properly. Now raises can take months. Anyone who's done one knows that. They normally take anywhere from sort of 3 to 6 months. But the more you need to do as much as you can to shorten that as much as you can. So preparation is key, as I said, and can save you months in time. Most important thing in any raise, in my opinion, and I've spoken to lots of people from investors and founders, is where are you going? Why are you and why is this company the company that these investors need to back? So focus on that a lot in your pitch, focus on that a lot in your follow-up. It's going to really help you. Here's some evidence from the market. This is Blackbird and Airtree, two of the top investors. You can see it's about the game changers and the wild hearts. So it's about you and your mission and your company and why should they be involved. Don't forget a little FOMO. Make sure you've got that energy in your raise all the time. It's a big driver for getting your raise closed. So here we're going into what you should pitch. Again, I'm focusing on that same sort of theme. You can see there the team. So you, very important. The problem solution, very important. What's the deal? Make sure you got the deal clear. And what are you going to do with the money? So really early rounds, that's critical. With investor readiness, a little bit more information. So do your market research. Make sure you know investors invest in your industry, in your niche, at your stage. You don't want to be wasting time talking to people that are in the wrong space from you, because they're not going to invest. Make sure you're talking to investors that invest as well. Don't just spend heaps of time talking to people if they haven't done an investment in the last year, because it's really difficult for you to get funding in that circumstance. Make sure you use a startup accountant and a lawyer. Don't work with professional services providers that aren't focused in your niche, in growth companies that understand your deal and what's going on. They're going to slow you down. They're going to give you the wrong deals. They're going to slow down your discussions with investors, and they're going to give you the wrong advice and slow down your raise. That can cost you weeks and even months and even kill your deal, that sort of stuff. So yeah, get expert, respected help. The Wholesale Investor and Chris teams are great. There's lots of advisors out there that have done all this stuff before. Ask as many questions as you can. Make sure you're not there's an investor market out there. Your company needs to look a certain way. It needs to have a certain val. It needs to have particular terms in the term sheet. There's all these things that you need to do to make your raise go well. And if you don't do those things, it literally delays your raise by weeks or months. So make sure you get help. You're going to know the rules of your company. So how does your constitution work? How does your current shareholders agreement work? Have you got an ESOP? Is there waivers that you need to get done? You need to know that stuff before you run your raise. If you don't, it's just going to slow you down. You can get all the way to the last minute when you've got an investor right there, and then you realize in due diligence that there's all these technical things that you haven't done. It can delay your raise by months and even kill it. So get that stuff done up front. Kate's really good at that stuff, but obviously there's other people that can help you with that too. Use standardized agreements as much as possible. Look at the Airtree open source term sheet, ask around what's the right documentation that you should be using. So it just makes investors' life so much easier when they go to sign. Again, know what the market terms are. So, what valuations are going in your industry and for your stage, and what other terms that people are getting. Are people using a convertible note, or are they using equity to raise at your stage? You need to know those things so that when you're actually raising, you don't get blocked along the way. Make sure you get a data room prepared, depending on your stage, how much you're raising, how professional investors are that are coming in. Whatever, you need a data room of some kind. You need it done in advance. You don't want to get stuck in the middle of your raise realizing you haven't prepared some core piece of information, because let me tell you, these things are all technical, and if you've got to do them in the middle of your raise, they're really going to slow you down. So understand how your cap table works. The top two things in due diligence for investors is what's going on in the cap table and what's going on with the modeling. So what's the deal terms? What's the dilution? Are there any con notes? Are there any employee options? Do they need a share split? Is ASIC up to date? All these things are critical for closing your round. And if you don't do them at the beginning, before you start raising, then you're just going to have to deal with them later. It can cost you weeks, months, tens of thousands of dollars in legal fees. It's like really bad form. Not to criticize, only to help you speed up your round a lot. So the marketing, we see I'm going for time, not too bad. So with the marketing, have a big enough list. So, obviously you guys are in the wholesale investor community. They're wonderful for that. They've got one of the best, markets in the country, but make sure you've got enough investors that you're talking to. If you're raising $1 million and you think your average check size is going to be 100,000, you need at least 10 investors, but not all the people you talk to are going to invest. So you can back solve how many relationships you need to have, to be able to get your funding. Really smart way of thinking. Build relationships before and during. You can't expect people to invest when they first meet you. You need to understand that, investors require a relationship in most circumstances to be able to invest. Know who to work with, when and how. So just have the right advisors on your side. Make sure you're getting the right help along the way. You do need to create a sense of urgency. So you need to you need to know that you've got enough investors to be able to get your round done. And you need to work hard and with respect and build relationships and have a closing date, and really make sure that there's a process around that to make sure that there's tension and people need to make a decision, so the investors are, happy to, proceed, and you can get your round closed. And follow up properly. So many people will just get an email address and they'll send an email and they won't get a reply, and then they'll just give up. And you can't do that. You need to email, you need to email, you need to email, you need to get that call done, and then you need to follow up. Not in a disrespectful way, but you really need to follow up properly, because so many investments are wasted based on just poor execution. I've definitely seen that. All right, and now to closing. So it can take weeks from when you think you've got your deal done to when the money's in the bank. It can take longer, and you can really speed that up. So automate it as much as you can. Oh, misspelled crisp. Sorry, guys. Crisp, cake, things like that. Automate, use software as much as you can. Create a sense of urgency. Make sure you're following up well. There's a strong concept in Australia of a lead investor. I think this works really well within the wholesale community as well. So you need lead investors, you need momentum, and then you need to really follow up after that. It's really critical for getting your round done. And look, avoid signing blockages. So make sure you've got some good software or good lawyers, and that the signing process is really nice and tight, because that can also delay your raise as well. Now, each one of these things on its own, around your raise won't kill the timing of the raise, but there's so many things you need to do. And unfortunately, what happens is there's a week delay here, and a 3-week delay here, and a 2-week delay there, and a 4-week delay there. And then your raise is like 6, 8, 12 months long. We need to remove all these little delays via preparation mainly, and good support and good systems. And then your raise can be, 2 months long. And, think about how much more your company can get done if your raise is 2 months instead of 8 months. Just a little bit on the terms. I'm not going to go into these in detail, but if you're doing an equity round, you need to know about liquidation preferences and anti-dilution and founder vesting and all these things. Really important that you're not learning these in the middle of your raise. One, it can slow you down a lot trying to understand them while you're negotiating, which obviously puts all the power with the investor. I'm not trying to hustle investors here either, by the way. I'm just trying to create a fair situation. But you need to know this stuff in advance. So before you get into your raise, get your shareholders agreement out, understand all these things. If you haven't got a shareholders agreement, understand you're probably going to have one when you get your term sheet. So again, understand all these things, understand how they work in practice, how they work legally. If you make mistakes in this area, it can cost you millions in the long run. It can cost you control of your company. You know, there's lots of downsides if you get these things wrong. But you need to be aware of them because you pretty much can't get a good deal done without these things. So just best to get into it as soon as possible. So I've got a lot of resources here. We've got a blog. There's evaluation software there. There's heaps of great documents on the Airtree website. There's some capital raising treasure in there, but I think most of this stuff you get sorted out by a wholesale investor anyway. So that's it from me. There's a bunch of tips in there to shorten up your raise by half, which any founder, any executive, you know, really should be working on, because the time you spend on raising could be spent on growing a company and with your customers and with your team. And, you know, I know, you know, what I'd rather be doing. So look, I hope that was helpful. Thanks for checking in, and yeah, good luck with your raise.